I'm Charlotte McLeod with the Investing News Network, and here today with me is Mark Yaxley, Managing Director at SWP. Thank you so much for joining me online today. It's great to see you.
Always good to see you, Charlotte.
Yes, and today, so you're joining us all the way, I believe, from Portugal, where you've just been attending the LBMA conference. So you very kindly agreed to sit down and talk about some of the takeaways that you had from that event, which is a major conference for precious metals during the year. So let's start off by talking about sentiment. What was the sentiment that you felt when you were out there on the show floor talking to people?
Yeah, there was a lot of excitement, to be honest. You never really know how people are going to be feeling when you get a bunch of industry delegates and colleagues together. But I can tell you that the overall feeling was very, very positive. And I think that that comes off the back of 2.5 years, going on 3 years of very strong demand for physical precious metals. And just to clarify, the people that were attending were refineries, were bankers or financiers, were suppliers, so wholesalers. Major wholesalers from different parts of the world, and also service providers like Brinks and Loomis and companies like that. So overall, a lot of positive energy, and obviously some marketing dollars being spent, which is always a sign of our industry, doing fairly well.
Right. And you shared some interesting takeaways just before we started talking. One of them was something that you told me about storage companies. And I think this plays back into, the strong demand and the good feelings that you're mentioning. So I wondered if you could elaborate on some of the themes that you're seeing emerging among these storage companies and what that can tell us about the industry right now.
Yeah, it's really interesting because usually when we talk about demand, we focus on the demand for physical products and premiums and other indicators that will give us a sense of how well the industry is doing and how strong the demand for physical precious metals is. But one of the takeaways I had from sitting down in some of these meetings during the LBMA was that there's a lot of investment right now in the growth of storage companies. So these are companies that are built like ours, that are built to store precious metals on behalf of investors. And it must have been at least half a dozen different facilities that we talked about, one being in Singapore, our own in the Cayman Islands, and several in the United States right now that are seeking capital or have already secured the capital to grow their facilities significantly. And really what this is, the risks that these business owners are taking is directly reflective of the amount of physical metal that's going into storage, which reflects the overall strong demand in the industry right now. So that was a really interesting takeaway for me, and another good indicator that physical demand is very, very strong since these guys are willing to take those risks.
Right. And we've talked about this strong demand before. We've talked about kind of who's buying. We've talked about premiums and things like that. Maybe you can give, for people who haven't seen previous interviews, where is this demand coming from right now, this strong demand for the physical metal?
Yeah, it's really interesting. And that was talked about on some of the panels at the LBMA as well, is obviously the price hasn't really reflected this strong physical demand. So you have a softening paper market or ETF market. So there has been outflows out of the ETFs over the last, I think now 3, 4, 5 months consecutively. So on that side of the market, a little bit of drop in demand, but on the physical side of the market, which is really the one that we're talking about here when we talk about the LBMA and some of the people at the conference, the physical demand is actually quite strong, and some companies seen record sales, as recent as in September of this year. And more specifically, to name a few markets, obviously a lot of people are talking about the Chinese market right now, that the gold is selling at a premium in the Chinese market. But I spoke to 2 separate refiners out of Turkey, which is a very strong refining country. They produce a lot of gold and they export a lot of gold. So the 2 refineries that I spoke to said, we'd love to sell you some gold, SWP, but we can't because we don't have enough to meet the domestic Turkish demand. And the reason for that is because that inflation is running at 60% in Turkey right now. So their domestic investors are just sucking up all the available physical gold right now. So they're not exporting to the North American market, or if they are, it's as a minimal amount as they can just to keep North American suppliers happy. So there are signs of continued very strong demand, but on the flip side of that, the ETFs, for whatever reason, the Western investors are still not that interested right now.
Okay, so that's another really interesting takeaway. Thank you for sharing that one with us. I wonder what that tells you as, as a bullion company. How does that influence, advice that you might give to people who are considering buying?
Yeah, good question. And there was a really interesting snippet from one of the panels. One of the analysts said, Western investors will wait for the price to go up before they buy, versus Eastern investors, like Indian investors who are buying either for jewelry, for the Indian wedding season, or Chinese investors are very price sensitive, very price savvy, and they tend to buy on dips. And that's why there's a premium in those markets right now. People are paying $30 an ounce more than they would usually pay just to get their hands on gold. While in the West, people are stepping away from gold right now. So my advice, coming back to your question, to my clients or our clients who are mostly Canadians and Americans, is maybe you should be mirroring Eastern investors and taking advantage of these dips, of this price softening, and not waiting for it to go back up to 1,800 or 2,000 and then buying at a recent high.
That's really interesting. So what do you think is wrong with all these people in the Western world? And I'll include myself over there because that's where we are. Do we just not understand a sale? Is that what's happening?
Well, that's a tough question. What's wrong with all the people in the West? We have a lot of problems in the West right now. I think, Western investors tend to focus on the stock market. They tend to focus on investments that bear interest and that bear dividends. And there's nothing wrong with that. That should be part of your balanced portfolio. We should all have those types of investments in our portfolio. Whereas some more traditional markets, including Germany in Europe, people really focus on wealth preservation. They've been through these really wild inflationary cycles in their history. Germany being one, Turkey is like an ongoing thing. Argentina and Latin America is another market where inflation is rampant, and people buy gold. That's when inflation is 60%, even if you're losing a little bit on your gold purchase, it's much better than holding dollars of your local currency that are just being devalued at an extraordinary rate. So I don't think it's necessarily that there's anything wrong with Western investors. I think that maybe we're not used to dealing with high levels of prolonged inflation, and we haven't quite figured out yet that gold really is something that can help in that conversation. But again, I think it goes back to people realizing that, it's not bad to buy in a downward market. In fact, that's when you should be buying more gold for your portfolio.
Okay, I think that's a really fair and well thought out answer. So going back to some of your takeaways from the conference, I would imagine, as you're mentioning before we started talking online here, ESG was a major theme. We're seeing this discussed everywhere at this point. We all know it's important, but we might not know, exactly what to look for when it comes to ESG, especially when it comes to mining. So I wondered if you could share some of your takeaways there. What were people saying about ESG?
It's interesting. It was probably the single topic that received the most attention from the LBMA, so the LBMA is basically setting, for lack of a better term, the standard for the rest of the industry, for the LBMA members and for other participants in the ecosystem. And so they've come forth and said, hey, we think ESG is very important, part of the conversation going forward. And they've also included in the ESG conversation artisanal mining. They actually came out with a press release just last week saying one of our big focuses going forward is to include artisanal mining. And for people that don't know, and I didn't really understand before going to the conference what that meant, it means small scale mining. It means miners that might not be regulated or licensed. And that can be happening in places like Central America, Latin America, Africa. And so the LBMA wants to include these small production mines in the global supply chain. But in order to include them, they want to make sure that they meet basic environmental regulations. Obviously, it's not socially disruptive. These aren't criminals, for example. And they want to add the standard governance as well. So they kind of tied those two themes together and are making a push into that. I thought it's great. Like any social issue, it's important to talk about it, and there is a future, and there's obviously value, and that seems to be, like you said, everyone's talking about that. Seems to be where the momentum is pushing us. But keeping in mind that artisanal mining represents a very, very small percentage of the global output. And And even some of the panelists that are experts in the field of ESG and artisanal mining were saying, look, we have a long way to go. We're just getting started. This topic is relatively new. It's going to require a lot of investment. And maybe for individual investors, your viewers, the most important takeaway there is if we want to achieve ESG and this better mining world, it's going to cost them more money. They're going to pay more for their gold and silver at the end of the day. That premium is not going to be absorbed by the mining company or by the suppliers, refiners, and everybody else in the supply chain. It's going to be absorbed by the retail investors. So it's a good thing. It's not there. It's going to take another decade, they think, and it's going to cost a little bit more money to get us there as well.
Okay, that is pretty interesting. I haven't heard too much about ESG on the artisanal mining side, so that's new information for me. Were people talking much about ESG on the company side? Because I know people also are generating a lot of questions about that. How do you know if a company is following good practices? How do we know which standards we should be looking at? Was that a topic?
Absolutely. And especially the conversations I sat in on, it was on the refinery level. So companies like Metalor, Nadir, Asahi, the Hemp Swiss, these are all companies that were present. They had large delegations and they participated on the panels and shared their comments. And they all are at various stages of their push into the ESG. PAMP, for example, has really been focused. They're a Swiss-based company, so the Swiss are really at the forefront. It seems they often are. This is a culture that is very environmentally conscious, and they have a lot of funding. It's a very well-funded country, and their companies are well-funded. So they have the ability to focus on these issues, and they seem to be at the forefront of that conversation at a company level. And then you have a varying degree of adoption below that, depending on the different companies. And one of the comments from the gentleman who was representing Metalor's refining was that, yes, we are making a push. Yes, we've developed this blockchain platform in order to track gold from the mine to our refinery. But he said, we also realize we have a long way to go. It's very costly and difficult to have boots on the ground at a mining site in Latin America to make sure that they're actually following the governance and the environmental regulations that are in place. And that's one of the biggest challenges. It's a great concept, but in practice, it's extremely challenging to do that in some of the most challenging environmental situations and rural areas in all these places around the world.
Right. And so you're just mentioning tracking using the blockchain. And I think technology is really connected to ESG in many ways, but it's also a whole separate topic, ways that you can modernize the mining industry. So what were your takeaways there? Because I imagine that's something that people had a lot to say about as well.
Yeah, there was 3 or 4 different blockchain technology companies that participated in the conference. The LBMA had launched a pilot project 6 months ago with 2 of those blockchain software technology companies to do basically a test run of tracking batches of gold or lots of gold from the mines to the refineries down the supply chain. So they've now completed that pilot project, and it sounds like the LBMA is going to pick 1 or 2 of these companies to try to develop software and a system that all supply chain participants can utilize in order to achieve some of the goals that we had just mentioned about. And so, that ties into a bigger theme that came up at the conference as well, which is our industry is trying to be more connected with one another. We're a very fragmented industry. Everyone kind of does their own thing. The North Americans have their own way of doing things, and you have players from all over the world. I mean, gold is truly international. So as a whole, we want to be more connected, and the blockchain is one way that companies can do that. And by doing that, we can get the retail market to really believe in the product that we're selling and know, for example, that it does meet the ESG standards and feel good about buying gold at a retail level. So that it's a big, big challenge. The blockchain is part of that solution.
Okay, yeah, that makes sense. And I have not been to this one, so this is all new information for me. So I think you've given us a lot of good information. One thing I did some reading about, online, what other people were saying about this event. And one thing I saw was, I think they were polling, maybe you can tell me, polling attendees or participants about prices, right? And
Mhm.
it sounds like silver really was the standout for people. So I wondered if I could get your take on that. Does that make sense to you in terms of what you were hearing there or what you're seeing in the precious metal sector in general?
It's funny you asked because I just read that article, I think that you're referring to, about 15 minutes before we spoke, and the number jumped out to me. I was a little bit surprised that the delegates were feeling so positive about the silver price. And correct me if I'm wrong, but I think the number was like 28 US an ounces, where the delegates kind of settled that that would be the average price a year from now. Um, I think that's optimistic, not because I don't think it's attainable, but given the recent trends with silver, and I can say over the last few weeks, there's been a little bit less momentum behind the demand for physical metals. I think we've seen at SWP, we've seen some investors simply give up, long-standing clients that have kind of timed out. They just said, okay, I've waited long enough for silver to do something here, and I'm exiting. And I'm not saying that's the right thing to do. I think, in fact, like we said earlier, this is when you double down, or you invest on the dips and you wait for it to rise. But 28, that's an increase from today of about 70% in a year. That would be an excellent year. It would take a major event beyond the war in the Ukraine, beyond the US dollar cooling off, to get there. So I think I would settle more on $20 to $22 over the next year for silver. And on gold, the number that was thrown around was about 1800, 1830, and I think there's a fair chance that we'll see that, but 28 seemed a little high for me personally.
Yeah, no, I was looking at that and thinking, is this a typo? What's going on here? So interesting.
Maybe it was.
Yeah. Okay, so I think you shared really a lot of good snippets with us about the LBMA event. Is there anything else that we didn't cover that you would pull out? Any key quotes or really interesting points that we haven't yet covered?
I think, yeah, I'll close by saying this, and it's not it's more of I guess a social issue, or a little bit of a development in the industry. What I was really happy to see, first of all, a lot more young faces in the room. Our industry is always, you've been to conferences, you interview a lot of people, and this is not an insult to my colleagues or my mentors, but there's a lot of older, gray-haired gentlemen in our industry, and there has been for forever. And so I noticed there was a lot more young people in the room, and I also noticed there's a lot more young women in the room, and that's really encouraging. And not only young women, but female CEOs. Met with a few that were super impressive, and our industry desperately needs diversity and desperately needs new energy and a female component. And that was really encouraging. I said that to a few people while I was there. I hope to see them again next year. I hope they make their careers in this industry, and I hope they bring new ideas to the table that are going to bring us into in more modern times, because we are probably one of the worst marketed and promoted industries on the planet, considering we've been doing this for so long. So we could use the energy.
Yeah, no, I agree. So that's great to hear. I love to learn from everybody who's been here for a long time, but it is so good to see new faces who are a little bit on the younger side. Okay. Well, thank you so much for coming on to share about the event. This is really good. This is educational. Great to see you again.
You too, Charlotte. And I would recommend, speaking of young, successful women, you should make the trip to the next LBMA. It's in Barcelona next September, October. So yeah, I'd recommend it. From a journalistic point of view, it'd probably be worth your while. A lot of interesting people there.
Definitely, I'm feeling tempted now. So we'll try to add that to our roster for next year. That's great. And hopefully we'll see you there.
You will. Thank
Okay.
you.
Thank you. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Mark Yaxley with SWP.